What's up? This is for anyone interested in investing in the stock market, but maybe you don't know where to start, which type of stocks to invest in, or what you need to be aware of. I've been doing this daily for the last 2.5 years, so today I'll go over all the things. So let's assume you know basically nothing about the stock market, but you just got done watching the show Billions, and you think Axe and Taylor are pretty awesome, so you're ready to get started. First thing you're going to want to do is open up a brokerage account. I use both TD Ameritrade and Robinhood. Ameritrade is a more traditional platform, whose platform definitely might come off as intimidating to a newer investor, but they do have great customer service that you can call up and ask any dumb question you could think of. Then there's Robinhood. Robinhood is an app-based platform. It's pretty new and has almost no customer service. However, it's incredibly easy to use. I call it the Instagram of stocks. If you know how to use Instagram, you'll know how to use Robinhood. So let's get started. Again, assuming you know almost nothing about the stock market, I'd recommend taking a month, getting familiar with the stock market, the platform you're using, how the market moves, 5, 10, 15 minutes a day. Whenever a company or stock crosses your mind, look it up on your brokerage account, Google, take a look at the stock chart, see what the analysts have to say. Start forming a watch list of some of your favorite stocks. A lot of platforms even offer you paper money. For example, they might give you $1 million worth of basically fake money to start trading with so you can get used to it. If you want to, you could definitely take 2 or 3 days in a row, spending hours a day really studying the market and trying to cram that all in your head, but that feels more like work, and that's not fun. I'd recommend taking about 30 days, spending 5, 10, 15 minutes a day at your leisure, getting used to the market, how it moves, finding individual stocks, and getting used to your platform. You can download the CNBC app, which gives you stock alerts. You can start watching CNBC and stock-related programs, and checking into stock-related news every day. See how the news headlines affect prices. Once you're ready to start investing, let's break down the type of portfolio you should have. There's investors who are more passive, maybe they don't want to check on it all the time, maybe save for retirement or build up wealth over the long term. Then there's investors who are more active, want to beat the market, and make money as quickly as possible. Probably the majority of people watching in this video fall into that category. So let's briefly discuss what type of portfolio you should have if you're a passive investor, then we'll get into the fun shit. If you're more passive long-term, you're going to want to invest the majority of your portfolio in index funds and ETFs that track the broader market. This way your money will go up at a steady pace over time. Not only will your value be increased, most of them also kick back dividends, which essentially means they'll be paying you a small bonus 4 times a year. Whereas individual stocks require you to constantly check up on them, make sure they're not lagging behind their sector. Whereas the stock market as a whole, that's not going anywhere. Now that's out of the way. Now for the people who want to make money as quickly as possible. This obviously means fast gains, but equally as important, no losses. So you're going to want to create a diverse portfolio of winners. What am I, Jordan Belfort giving a speech to his disciples? Portfolio of winners. He doesn't do this. You should do about 25% in index funds and ETFs. I like DIA, which follows the Dow, SPY that follows the S&P 500. You could also do Vanguard or a NASDAQ one. This way, when you find yourself trapped in a sea storm in the middle of a tumultuous market, you'll have a nice, even keel taking you right up. Anyway, 65% of your portfolio should be in large companies that you're personally familiar with, have a history of consistently beating the market, and most analysts also agree they're a good pick. Think stocks like Microsoft, Apple, Visa, Bank of America, Amazon, or Google. Now for the fun part, your last 10%. With this you can use to invest in smaller, newer, less stable companies that are more volatile, but might make you really fast gains. Companies that you personally like, believe in, maybe you feel the analysts disagree with you, new IPOs, penny stocks. You should stay away from penny stocks, but if there's one you really believe in, go ahead and put it in this category. You could even invest in stocks that have to do with... So let's say you spent the last month glancing into the market and there's a really special stock that you've had your eye on and you're ready to make your move. Let's say it's the stock of Visa. Go to your brokerage account where you can find analysis on the stock. Ameritrade offers opinions by these trusty sources and also tells you what the date was when these opinions were put forth onto the earth. You could also find tons of research tools and learn about charting and candlestick shit. That's a whole nother video. In Robinhood, you can scroll down and see analyst recos in this nice little line chart. Ooh, look at that. They also have news headlines and earnings to pay attention to. If you have time, you can also listen to conference calls, which is an important thing to do. However, if you don't have time, in my opinion, it's actually more valuable to listen to analysts. Obviously, don't blindly follow what they say, but take it into consideration, because chances are they understand what to look for in the conference call a lot better than you do. I also always search my stock in the Google News tab and read all the recent articles. I mean, I don't read it, I just highlight the words and my computer reads it to me. It's 2020. I'm gonna sit there reading with my eyes? No, you just read it to me. So let's say you've done all your research and you deem this is a good stock and you're ready to buy. Ideally, you want to buy it after a pullback. So let's say the stock's recently rallied through the roof and now it's undergoing a little bit of a correction. Investors in the stock are selling it to take their new profits. Ideally, that's when you should buy. If you're investing for the long term, it doesn't really matter. You can also buy it in small increments. You could buy a little. If it goes up, great. If it goes down a little bit, you can buy a little more. One final extremely important thing to remember. This is one of the main ways some people actually end up losing money in the stock market. Anytime you buy anything, beforehand, ask yourself the same question your brokerage probably asked you when you signed up. And that's, what would you do if this stock crashes 10% or even 15%? Like, actually think about it. If your action would be to panic, to get mad and sell it, don't buy it no matter what, because that will happen. If you plan to be investing for the rest of your life, 100% guaranteed, you will have down days, you'll have down weeks, and unless you're a near perfect investor, you'll probably have down months. It happens. If you're having down years, then you're probably doing something wrong. There are two exceptions to this. There could be a legitimate reason to sell. Whenever your stock goes down, you should always find out why. It could be something relatively meaningless, a negative report from an analyst, a correction in your stock, an overall market correction, temporary fear in the market or the specific sector, but there could be a legitimate reason to sell. Sometimes a company that was good yesterday is no longer good today. There could be competition, it could be lagging behind its sector, or maybe you've actually made a legitimate mistake. Last time I made what I would consider a mistake was when I first got started doing this daily. I thought GoPro was an amazing investment. Since I saw the YouTubers using it, professional athletes were using it, I thought I was getting into something just before it was about to take off. It was around $16 a share, so I bought some shares. It went up to 17.5, and I was mad. I thought I should have bought more. Then it starts dropping to under $16 a share. I get really excited. I buy more. Goes down to $14 a share. I buy even more. Then I start reading reports about how GoPro is losing significant market share to its competition, mainly because of the emergence of water-resistant phones. To me, this all made sense, so I ended up selling it at $9 a share. Even though I took a loss, it's good I sold it there, because now it's at $5 a share. That's really the only time that I've made what I would consider an actual mistake. That's the only time in the last 2.5 years I've made what I would consider a mistake. Here's something I actually end up doing every once in a while, and it's the second exception. Let's say I buy Visa, and an overall market correction happens. I see another stock that I've been having my eye on for a while, I've really been wanting to buy, but it's been rallying. Let's say that stock is Apple. Let's say a market correction hits, Visa's down 4%, but then Apple gets hit with a really negative analyst report that makes the stock crash 10%. Or it gets taken down due to like algorithmic trading. More on that in another video. But let's say Apple's down, I know it's going to rebound fast, and I have no free cash in the portfolio to go ahead and buy it. In that case, let's say I'm down on a stock that might move a little bit slower, it would make financial sense to take the loss and sell it, and then buy Apple, since I'm going to make more money there. Obviously, I'm not trying to say Apple's better than Visa or recommending one over the other. Apple is a lot more volatile and prone to like analyst reports, and Visa's more stable. Try to avoid this by buying the right stock in the first place, but even if it happens every once in a while, especially because there's no trading fees almost anywhere anymore, it's not that big of a deal. I'll be doing more stock market and investment related videos in the near future. So be sure to hit the subscribe button if you want to learn how to make money, or if you want to learn how to make a really good drink, or like if you want to learn how to make really good food, or want to learn how to make good times in Vegas and advices on that, or other places like Cuba, or this video. Be sure to subscribe.